Hey everyone, welcome back to our channel. Today we're talking about Turkey's recent policy rate cut and the devastating earthquake that hit the country's eastern region. On February 23, the Central Bank of the Republic of Turkey announced that it was cutting its policy rate by 50 basis points, from 16% to 15.5%. This move surprised some analysts who were expecting a more cautious approach, given the country's high inflation rate. The rate cut is aimed at boosting economic growth, which has been hampered by the COVID-19 pandemic and other challenges. However, this rate cut came just days after Turkey was hit by a 6.1 magnitude earthquake on February 19, which caused widespread damage and loss of life. The earthquake struck the eastern province of Elazig, and rescue efforts are still underway. According to the latest reports, at least 38 people have been killed and more than 1,600 injured. The earthquake has added to the challenges facing the Turkish economy, which has been struggling with high inflation and low growth. The government has announced a number of measures aimed at supporting the affected areas, including housing aid, financial assistance, and tax exemptions for businesses. However, the earthquake has also disrupted economic activity in the region and added to the government's financial burden. Despite these challenges, the Turkish government and central bank seem to be betting that the benefits of the rate cut will outweigh the risks. They hope that the move will stimulate economic growth, create jobs, and ultimately lead to a reduction in inflation. The rate cut is also part of a broader effort by the Turkish government to attract foreign investment and improve the country's economic prospects. However, some experts have expressed concerns about the potential impact of the rate cut on inflation. Turkey has been struggling with high inflation for several years, with the most recent inflation rate clocking in at 36% in January 2023. Some worry that the rate cut could lead to even higher inflation, as it may increase the money supply and reduce the value of the Turkish lira. The earthquake has also highlighted the importance of disaster preparedness and resilience in Turkey. The country is located in a seismically active region and has been hit by several earthquakes in the past, including a 7.0 magnitude earthquake in Izmit in 1999 that killed more than 17,000 people. The government has made some efforts to improve building codes and emergency response, but more needs to be done to ensure that communities are better prepared for disasters. In addition to the challenges posed by the earthquake, Turkey's economy has been facing a number of other issues in recent years. One of the main challenges has been high inflation, which has eroded the value of the Turkish lira and made it more difficult for the government to attract foreign investment. The country has also been grappling with a high unemployment rate, which has been exacerbated by the COVID-19 pandemic. To address these issues, the Turkish government has implemented a number of economic policies in recent years, including tight monetary policy, fiscal stimulus, and structural reforms. However, these measures have had mixed results, and the country's economic outlook remains uncertain. One of the main concerns for Turkey's economy is the high level of debt, which has been growing rapidly in recent years. The country's debt-to-GDP ratio has increased from around 30% in 2015 to over 60% in 2022, according to the IMF. This has raised concerns about the country's ability to service its debt and maintain economic stability. Despite these challenges, there are some reasons for optimism. Turkey has a young and growing population, a diversified economy, and strategic geographical location. The country is also home to several major cities that are hubs for business, finance, and culture. In addition, Turkey has been actively seeking to expand its economic ties with other countries, particularly in the Middle East, Africa, and Asia. To boost economic growth, the Turkish government has launched a number of initiatives aimed at attracting foreign investment and promoting entrepreneurship. These initiatives include tax incentives, regulatory reforms, and funding for startups and small businesses. The government has also invested heavily in infrastructure projects, such as airports, highways, and railways, which have helped to improve connectivity and logistics. However, the earthquake has shown that Turkey also needs to invest more in disaster preparedness and resilience. This includes improving building codes, strengthening emergency response, and increasing public awareness about earthquake safety. The government has announced plans to allocate more resources to these areas, but it remains to be seen how effective these measures will be. In the meantime, the Turkish people are coming together to support those affected by the earthquake. This outpouring of solidarity and compassion is a testament to the resilience and strength of the Turkish people. As always, we want to hear from you. What do you think about the rate cut and the earthquake? What are your thoughts on Turkey's economic prospects? Let us know in the comments below. And don't forget to subscribe to our channel, hit the like button, and share this video with your friends. Thanks for watching, and we'll see you in the next one.